And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld taking you through to that closing bell with the global simulcast. Carol Massar, Tim Stenovec, join us from the radio booth as we bring together our audiences across all of our Bloomberg platforms, including our partnership with YouTube here on what's shaping up to be the widest trading session for the S&P and the NASDAQ since those Liberation Day moments that we had back in April. A big downdraft today, Carol Massar.
Yeah, those swings, right? That's what's kind of catching us by surprise. I mean, just look at a name like NVIDIA, right? Still trading off of those results. When they reported last night, we saw the stock rally. It initially opened up about 5% or so. It's been down as much as 3.6%. I mean, quite a swing. What, 8, almost 9% there just on that name alone. So that's kind of where we are right now.
Yeah, taking a look at the S&P 500, it was as high as close to 2%, 1.93%, Katie, early this morning, down as much as 1.63%. It started moving lower just before 11 a.m., between 10 and 11, and now hovering at its close to worst levels of the day.
Yeah, it's interesting to think about what is doing well right now. Your biggest gainer, which I know we're going to talk about, is Walmart. But that, could be worrisome as well when you think about consumers perhaps participating in that trade down. That would certainly benefit a Walmart.
And also, there are a lot of concerns about the results that we got out of NVIDIA. And we kind of missed this last night because we were talking about those monster revenue growth numbers. But when you took a closer look at the buildup in inventories and, of course, that big buildup in accounts receivable, the idea that they're selling things that they haven't been paid for yet, the growth rate on both of those metrics outpaced the revenue growth number itself. That's a big part of the reason why you saw NVIDIA flip from a 5% gain at the open to what looks like about a 3% loss here at the close. And that's dragging down all of the major indices that it's a part of. The S&P 500 down about 100 points on the day, or about 1.5% from peak to trough today, about a 240-point swing, the widest swing we've had in the S&P 500 since April. The NASDAQ down almost 500 points, or 2.2%. The Dow Jones Industrial Average down 387 points, or 0.8%. And the Russell 2000 also moving lower by about 43 points, or 1.8%.
And we do have some breaking earnings news right now. Let me just jump in and break into it. The first quarter adjusted EPS beating estimates. That's coming in at $3.34. The estimate had been for $3.09. So quite a beat there. But then you take a look at some of the other metrics as well. Net revenue coming in for the quarter at $3.89 billion, also ahead of expectations. When you take a look at the guide ahead, they see second quarter revenue about $14 billion to $15 billion. Our headline saying that the estimate was for $4.48 billion, which certainly seems like quite a beat. We're going to try to get you some more context around those numbers, but currently down about 2%.
And just a reminder, we are expecting to get some other earnings today, including from Gap, bullish, as well as Ross Stores. In fact, Ross Stores crossing the wire right now as we speak. EPS does look like a beat for the most recent quarter, $1.58 versus estimates on the street for $1.40 on average. Sales up about 10% on a year-over-year basis to $5.6 billion. That's over street estimates of roughly about $5.41 billion. Total location count up about 1.8%. Inventories also higher, though, up about 9.4%.
And we do have some more context around that second quarter revenue figure. Certainly seemed wild. It was reported in our second quarter revenue seen about 14% to 15% higher for the second quarter. So there you have it.
All right, continue to track.
For Intuit.
Intuit, okay, yeah. Intuit out, Ross Stores out. We've got Intuit down about 2% here in the aftermarket. Hey, I'm going to go to some of the individual gainers. Katie, you mentioned Walmart. It is your number one gainer in the S&P 500 today, finishing just off its best levels of the session, up 6.5%. Company, world's largest retailer, as you know, raising its full-year sales and profit outlook. So it's a sign that Walmart is winning over price-sensitive shoppers while absorbing rising costs. The upbeat outlook driven by strong e-commerce performance and a wide assortment of products, including luxury items like pre-owned Chanel bags, which I had no idea that they were. I know. Did you know this?
No.
Yeah.
I don't.
I read that in our story.
It might surprise you. I'm not really in the market for a pre-owned Chanel bag.
Well, if you're thinking about gifts for people that you love. Anyway, so Walmart definitely an outperformer.
I give them experiences.
That's actually really loving, too. Regeneron, that went up about 4.9% in today's session. That, folks, number two gainer in the S&P 500, and I think it was also a top gainer in the NASDAQ 100. That one, as I mentioned, up as much as 7%, but finishing the day just shy of a 5% gain. It was halted last night, you might recall, about 24 hours ago after the close. Late yesterday and then today, the stock rallying after the FDA approved a higher dose of Eylea, I believe it said, to treat patients with macular edema following retinal vein occlusion. I'm not a doctor, don't play one on TV, but nonetheless, this was seen as a good sign in terms of indications for that drug. And also, Leerink Partners coming out and saying that this from Regeneron is on a better footing compared to a rival drug from Roche following the approvals. One more name I want to mention, Shoot. Cipher Mining was up 20% at its high today. It did finish down 0.4%, so I'm really sorry about that one.
I didn't understand.
Cipher Mining was up 20%. It rallied big time today. This was after it's a $6 billion market cap Bitcoin miner and data center operator. It signed an $830 million AI hosting agreement with Fluidstack, blah, 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 with additional backstop from Google. But apparently by the end of the day, investors weren't impressed. Sorry about that. That's kind of a...
Welcome to my world of decliners, Carol Massar.
Was a gainer, now a decliner, over to 2.
Okay, well, let's start with NVIDIA, the big one today, finishing down close to 3% on the day today. Shares initially climbed more than 5% after stronger than expected revenue forecast. The rally faded, though, as investors worried about AI spending. And at first, investors liked what they saw late yesterday, early today, at least with revenue and guidance for the data center division. But as Romaine said earlier, concerns when it comes to inventory buildup and accounts receivable. Once again, shares closing down close to 3%
Can I just add one honorable mention out of that? There was a huge downdraft today in SanDisk. And remember that big run-up that we saw?
How'd you know I wasn't going to get to that?
Oh, I don't know. Were you?
No.
Okay, anyway, you got me on that. But no, I mean, we talk about a 20% drop today, but really, I mean, it's down like 30% since it hit that all-time high, just I think it was like last week or the week, whatever, whenever November 12th was. But it gets to this idea that a lot of people are saying that now you're starting to see weakness in the memory makers now being dragged down by some of the issues going on with the broader AI trade.
Yeah, SanDisk shares ended up falling today by more than 20%. But usually, Romaine, you save the honorable mentions for when I'm done with all three. But this was a really important one.
Thanks
That's
for
okay.
pointing that out.
Strategy, the company formerly known as MicroStrategy, shares took a hit today. The company now faces the risk of being dropped from benchmark indices such as MSCI, USA, and NASDAQ 100. Shares today fell by more than 5%. JP Morgan Chase analysts out with a note earlier this week that warned that exclusion from major indices could lead to a loss of liquidity, higher funding costs, and decreased investor appeal. The decision on inclusion comes January 15th, as much as $2.8 billion potentially exiting if MSCI moves ahead with exclusion. Now, at its peak, the market's capitalization for Strategy soared above the value of its holdings, but the premium that's been there for so long with Strategy has pretty much vanished right now. So the valuation is really around how much crypto it actually has in its reserves right now, and that's a sign that investor belief is thinning quickly. And finally, Bath & Body Works shares took a tumble today. At one point, down more than 20%, ended up closing the day down 24% to the downside. This after the company cut its full-year adjusted earnings per share forecast. It cited negative consumer sentiment, Romaine.
All right, let's take a look at the yield space here. The entire yield curve on this day taking a bit of a shift lower, but that is not necessarily a broad endorsement of conviction that rates by the Fed are going to come down. 4 to 5 basis points lower here across the Treasury curve, but still, when you look at the implied probability on the Bloomberg terminal of a rate cut at the Fed's December 10th decision, still a bit of a split decision right now based on what people are betting on.
All right, we're going to talk a couple of AI stories on our radar, folks. One is about how Wall Street wants everyone using AI except its job applicants. So banks, they're using virtual interviews, online tests to screen applicants, but they're taking steps to make sure the candidates are not using AI to improve their chances of being picked. They basically, I mean, in a nutshell, they want to make sure that these folks know how to think.
What, critical thinking? That's what they're looking for, critical thinking.
It actually matters.
But don't be confused about this. They want people who are hired to know how to use AI. Some executives say they want colleges and universities to train students to be skilled at manipulating large language models, but just make sure you're not using it to do the application and kind of get through that interview process, I guess.
Yeah, it's funny because I'm sure that they're using AI in some capacity to screen the applicants, but the actual applicants.
You're still not using AI, Katie? That didn't change since yesterday?
I don't know, you know.
Well, there's another impact in all this, too. I mean, given all the focus on artificial intelligence and the fact that a lot of those artificial intelligence companies are private, we're actually seeing a lot of the analysts on Wall Street that would normally be covering public companies now starting to shift their attention to private markets. And that's actually causing a bit of a ruction there in the, I guess, financial industry labor market.
Well, it makes a lot of sense because you think about private companies. I'm talking about OpenAI having such an impact on the fortunes of public companies. I love this quote from Anne Malone. She is head of U.S. equity research over at Citigroup, saying that the demand from clients is huge. And basically, everyone wants to hear about private companies for one of two reasons. They either want to invest in them or they want to know about it because they might be a threat to your investment. So it's a real sign of the times here.
Yeah, we want to know more, right, about all these privately held companies.
I just don't know how you do it as an analyst when you don't have access to that information.
It's hard.
Yeah.
Yeah, it's called work.
Maybe ask.
You don't use AI.
Maybe, can we ask ChatGPT? Like, can you tell?
Right.
Yeah, I know.
Right.
I see that circular.
Watch out for the
thing.
hallucinations.